What if the change rattling in your pocket right now could balloon into a down payment on a house by the end of next year? And what if that possibility boils down to owning just 2,000 XRP tokens? Now that's a stack smaller than most people's coffee budgets. So let's stick around here because the numbers that I'm about to unpack had me pacing my living room at 2 AM, trying not to wake up the dog. Now, this might shock you, but I am not a financial advisor, and nothing in this video is financial advice. Cryptocurrencies are highly volatile, and you could lose all the money that you invest. You should always do your own research and consult a qualified professional. Your investments are entirely, well, your responsibility, and you should know that nothing is ever guaranteed when it comes to investing. Neither I, this channel, nor YouTube are liable for any losses. And this video is for entertainment and educational purposes only. Okay, so that's the legal dragon's slade. Let me tell you how I stumbled down this little at least XRP rabbit hole, right? So just picture me. I'm half asleep, scrolling through my feed when I land on an analyst Steph's latest charts. Now, this guy's got the dry erase kind of board, charisma, if you will, and every kind of doodle somehow looks like buried treasure. Now, he's yelling at the XRP market dominance, snapping a 7-year losing streak, right? And suddenly it's 2017 in my brain all over again. But back then, when kind of, fidget spinners were cool and XRP was nibbling at Bitcoin's heels with a kind of mouth-watering 30% share of the entire crypto universe. But if we fast forward to today, and XRP's slice is a measly 4%. So Bitcoin's kind of hogging 62% like the world's biggest pizza contest. Ethereum's chewing at 10%, and the rest of the toppings are scattered among every meme coin, du jour. Now, just so why, this really matters is why does Steph really kind of draw so much excitement, and why does it matter? And it's actually all because dominance, it kind of tells us who's wearing the crown, right? And if XRP claws back to its old 30% kingdom, well, today's quiet stack of 2,000 coins, it could morph into something that your future self sends postcards about. Okay, so let's run Steph's first no growth scenario. So let's think of it as the whole, I should say, the world's laziest bull market then, right? The total crypto market cap stays frozen at around $3.48 trillion. It's kind of like it's stuck in traffic. Yet, in this hypothetical, right, XRP somehow wrestles back 30% dominance. Sounds crazy, right? Maybe, but math doesn't judge, right? It's simple numeracy. So at that kind of dominance, right, the token would pop 7.5 times from the kind of $2.13 price sticker. So Steph kind of saw on his screen, landing right there, $17.10, right? So you can multiply that by 2,000 coins and you're kind of staring roughly at $34,200 hypothetically. But let's be real, turning a kind of $4,650 investment in bag into more than 34 grand without the kind of wider market budging is kind of like winning a desert cart, when you only ordered maybe coffee. Is it likely? Probably less than your cat learning to actually play chess, but it kind of illustrates some potential. Okay, so now let's crank the optimism dial up a bit. Scenario 2. Let's say the whole crypto pie doubles to $6.96 trillion. That's not unheard of. I mean, Bitcoin did that kind of single-handedly last cycle, and I could say where did my kind of gas fees go? And so in this kind of pumped up universe, XRP kind of grabs the same 30% share, catapulting it to roughly $34.20 a pop. Suddenly, your 2,000 coins, they aren't just a kind of side hustle. They're actually a 6-figure statement piece worth about $68,400, hypothetically. Now, that's more than a fancy EV, or if you're like, if you're like me and you're in Dubai, as many of you legends probably are, at least one indoor snow skiing escapade a week for the next decade. But hold up, you say. Charts aren't fortune cookies, and that's a very fair point. But Steph doesn't stop at market share gymnastics. He actually whips out technical analysis too. On XRP's monthly chart lies a glossy double bottom W pattern, and if chart patterns were superheroes, you know, the double bottom is basically Captain America. It's predictable but annoyingly effective. Now, Steph notes that the neckline already kind of has been smashed and the candle bodies are closing higher than my social battery at a crypto meetup. And the measured move points to about $30 per coin. Of course, all of this is hypothetical. Now, bingo, of course, you know, right there, right in the kind of ballpark of the scenario too. And hey, even a skeptic has to admit that the symmetrical kind of approach here is kind of a chef's kiss, satisfying kind of nod to technical analysis. But it's only part of the puzzle. Okay, so let me ground this in with a personal flashback then. Right, back in 2018, I watched a buddy ignore every red flag and ape into a random ICO token called, well, you can't really make this up, BananaCoin. Now, predictably, BananaCoin, it slipped on its own peel. What I learned here is that narratives can be suicide, right? And, you know, there's lots of things to talk about here, but dominance, of course, you know, dominance charts and multi-cycle kind of patterns, they whisper deeper truths about the market. XRP's historic dominance is a breadcrumb trail, and Steph's data suggests, it is just a suggestion, that, you know, the goose might actually find its way home. Still, we've got to keep our feet in reality. Like Steph himself reminds us that there's no guarantee of 30%. Maybe XRP just doubles to around 8%. Maybe it chills at 15%. Any climb still means greener grass compared to today. Now, my rule of thumb here is quite simple, right? Plan for a spectrum of different outcomes. Celebrate none until they're stamped on a blockchain. Now, by the way, if you're itching to kind of dissect these numbers with folk who actually read white papers for fun, you want to jump into our free educational Discord. There's a link in the description. We'll break down the charts, we debate the narratives, and yes, we share memes spicier than the average jalapeno. And here's a quick pit stop, right? Just shout out to the Blofin crypto exchange. Now, I park a slice of my trading stack there because their order books don't feel like a ghost town at 3 a.m. And if you fancy checking them out, the affiliate link is down below. Now, clicking that link supports the channel and helps keep my caffeine levels borderline unsafe. So thanks in advance. Okay, so let's zoom out. Let's imagine the XRP's market cap as a balloon in a room full of other balloons. All right, Bitcoin is the giant kind of Macy's parade balloon hogging ceiling space. Ethereum is the medium-sized helium orb. XRP right now is just a regular party balloon that someone tied to a couch. Now, market dominance is simply how much air is in each balloon relative to the total. So if XRP's balloon suddenly fills with helium and kind of scrapes the ceiling again, well, the price tag naturally soars, right? Because market cap is only macro level pricing. But balloons, they don't grow in a vacuum, of course, right? We need catalysts here, right? We're going to need ETF filings. We're going to need Treasury adoption. We're going to need cross-border payments flexing on legacy rails, and maybe, just maybe, regulatory clarity so crisp that you can buy into it. Now, Steph hints at institutions eyeing XRP for treasury reserves. So let's think of Fortune 500 CFOs diversifying away from that inflation nibbling dollar. If even a slither of corporate cash trickles into XRP, well, dominance could shift faster than a TikTok trend. Then there's the ETF rumor mill. An XRP spot ETF would lower the on-ramp barrier for your grandma's retirement funds. Multiply that demand with the kind of finite supply, and suddenly those scenario numbers, they feel less like moon math and more like napkin math. Of course, still hypothetical. Now, let me toss in a real world metaphor here, because market dominance is like getting the AUX chord at a party, right? When Bitcoin is blasting, everyone kind of nods along. Ethereum drops a remix and people kind of vibe out. But when an underdog gets the AUX and, spins in a track that ignites the dance floor, well, that's XRP reclaiming 30%. Now, people don't just hear it, they want to move. But still, there is skepticism, and rightly so. XRP's Lawsuit Limbo with the SEC hung over its head like storm clouds, but clouds, they do eventually pass, and as legal clarity does trickle down, exchanges relist and the token's liquidity widens. Dominance can naturally heal, and that doesn't necessarily mean instant fireworks. So think of it more like, I guess, tectonic plates, I should say, shifting. It's slow, it's invisible, but yet still very powerful. And so I had to ask myself here, right? If I stuck 2000 XRP under the metaphorical kind of mattress today, could I stomach the roller coaster? Right? Volatility, it is not a bug. It's actually the fee that we pay for the upside. So when Steph says conservative scenario returns, 365%, and optimistic scenario, 1,370%, those are not guarantees. They're just mathematical possibilities based on dominance snapshots. They're the if everything lines up outcome, but not the baseline. And for clarity, the baseline, prepare for chop, celebrate patience. And because you're on this channel, one more anecdote. In 2020, I sold a chunk of ETH at around $230 because I thought a 3x from $85 was peak euphoria. You can cue the faceplant, when it kind of 20x'd later on. Now, hindsight is a savage teacher, right? The moral of the story here is that it's easier to zoom out on a monthly chart than it is to kind of control your emotions. Now, Steph's scenarios are distant horizons, and horizons kind of only make sense to travelers willing to keep on walking. And if you're mapping your very own XRP journey here, you need to decide what slice of your portfolio that XRP deserves, right? For some, 2,000 coins might be a modest flyer. For others, it's mortgage money. So there's different stomachs, there's different risk appetites, and then you'll need to be considered. Right? The beauty of crypto storytelling like this here today is that we can learn from each other's kind of cautionary tales without repeating them. So let's remember, right, the double bottom pattern that Steph kind of shows off. It's not just technical kind of gobbledygook, if you will. Double bottoms, they often appear at the end of brutal downtrends. Price punches the floor twice, right? Buyers step in, momentum flips, and well, that W formation is kind of like watching a boxer hit the canvas, then vault up swinging. Right? Once the neckline breaks, the fighter clears the ropes. At the monthly scale, that's heavyweight behavior, not just a kind of scrawny altcoin kind of flail. And here's a quirky stat for you. If XRP actually kissed $34, a single XRP would cost more than a standard barrel of crude oil averaged at least in 2023. Now you need to wrap your kind of noggin around that next time you fill up your car, right? It kind of highlights how value is perception, right? What we're really buying today is belief in future cash flow or utility. In XRP's case, it's cross-border transactions, treasury diversification, and maybe bridging CBDCs. And that's the utility story underpinning dominance. Now, because we balance things out on this channel, skeptics will say that dominance comes at the expense of others. And fair enough, right? The pie is only so big unless, of course, the bakery expands. Now, Steph's optimistic scenario doubles the entire market cap, so everyone eats. History shows, bull cycles often lift multiple boats, though, of course, not equally, right? Ethereum might triple, smaller caps might do 20x, but if XRP snags the limelight, the ratio gains do outshine, at least in my opinion. And then there is this psychology, because when tokens break previous all-time highs, headlines explode. FOMO, the fear of missing out, swells, and retail money flows in. Now, XRP hovering around $3 again would be a musical kind of cue for mainstream media to dust off their 2018 footage. And by the time that they're covering it, dominance might already be well in double digits. Right? Early adopters, they set chairs out before the concert even starts. So let me kind of toss in a quick checklist then, right? I use when mulling over what if assets like XRP, right? You've got to have the narrative catalyst, right? The ETF rumors, the regulatory clarity, institutional adoption. Then you've got historical dominance windows, right? Has the asset led the dance floor before? What about technical structures, double bottoms, trendline breakouts on high time frame charts? And then we've got liquidities and listings, right? Wide exchange coverage reduces the rug pull risk. And then you've got personal time horizon, right? And I cannot ignore price noise for more than 12 to 24 months or so, right? And if a coin, of course, 4 out of 5, I'll allocate, right? At least if it ticks 4 out of the 5 boxes, I'll allocate. Now, XRP currently lights up that list like a pinball machine, but your mileage may, of course, vary. Now, I can almost hear you typing away, but what about taxes? Chill. Now, I'm, of course, like I'm not a financial advisor, I am not an accountant either, right? Laws, of course, they vary, so file accordingly, right? And if you do book a win, consider using a slice to pay for something memorable. Experiences, they kind of age better than Lambo memes. Now, before we wrap up, let's kind of glance at the elephant in the room then. 30% dominance is a mammoth feat, right? It's not easy. Right? Bitcoin's kind of stronghold loosening enough for XRP to claim nearly 1/3 of the pie requires either massive XRP specific innovation or Bitcoin plateauing. But that's kind of why scenario analysis lives in the probability curve. Nothing is guaranteed, right? The magic is in noticing that even half that dominance, let's say 15%, still implies a respectable multiple X gain. Of course, it's all hypothetical, but let's move on just a moment here to talk about a final kind of geeky little nugget, because Steph calls his conservative market cap assumptions highly conservative, because at least in past cycles, the total crypto valuation has ripped far harder. So if, history does rhyme and we see a 3 to 4x on the overall market instead of just 2x, well, XRP's numbers could get, stranger. And I say that knowing full well that Wall Street loves strange and long, at least as long as it's very profitable. But like I said, it's all very much hypothetical. So what do we take away from all of this? I think it's going to be that dominance is momentum's quieter cousin, right? Technical patterns can be, I guess, prophecy to a degree, and scenarios aren't promises, they're just kind of flashlights. So if 2000 XRP sounds like a ticket that you can afford to lose, yet, hope to kind of cash in later, the next 18 months, might actually be a kind of popcorn-worthy ride.